Hey guys, it is Mark Coe for February 13th. Been a little while since I did a video. It's been a little crazy in the markets the last week or so, and January is obviously a bit of a trend higher in equities. I wanted to take a look at a couple things here. I want to take a look at a few different things we're running and just point this out to you. One of the main thing I focus on are levels. So I want to show you this move in the E-minis and talk about levels and the power of levels and what bottom edges, top edges look like. So this is the E-minis. This is last week. There was nothing on a bigger picture that screamed that this was going to go lower, but there was something on a big picture that screamed to look at an area, and I want to show you what that looks like from a levels. And then once we get to that level, I want to show you what a shorter term within a level looks like. Okay, so right off the bat, we're going to go weekly chart on the E-minis. And one thing I always look at is where is consolidation? Where is it occurring? Which means that's the level that buyers held on the way up or sellers held on the way down, right? It's consolidation. So look at this move in the E-minis. This is last year. This is 2017. Here, let me get rid of some of this stuff. I just don't want the chart to look cluttered up here. But let's look at this move. So right off the bat, three things a market can do. It can trend higher, trend lower, or it can consolidate or go sideways. So what I'm always looking for to mark those areas are consolidations. And so right off the bat, this leg higher in the S&P, it looks very trendy. There are basically two spots you can pull from and call any kind of consolidation, this being one. And I'll show you the second one. It's much smaller, so again, very tough to really focus on a major consolidation. But you can see trend higher, a little sideways action, major trend higher, right up to the reversal. So why is this important? Well, it's important because on the way down, when you're looking for something to lean against, something to cover a short into, or something to potentially get long, that's your frame of reference, right? This is bigger picture money. These are the levels that have held or are breaking that big money is pushing it around. And I understand when you're looking at 5-minute charts, you don't see this. This is why I go through this process and say top-down long-term analysis. So right off the bat, you have this 2650 to 80 area, and then you have 2540 to 70, right? So as you take that down to a tighter time frame, what will you notice? Well, you'll notice at the bottom you see the same pattern, right? So now we're on a 4-hour chart of the E-minis. Here, I can put it back on the March contract. But when you're on the 4-hour, what you see is the same pattern develop, which is a bottom edge in play. Remember, the bigger picture bottom edge was 25, 40-ish to 70. Okay, so now you're at a smaller picture, and all you're developing is this look of saying, okay, where is the spot that buyers held? Well, that was identified on the 6th of February, right? And what that means is that that was the spot that it reacted from. It doesn't mean that you know it's a bottom, but you know buyers stepped in. Also, from a longer term perspective, you know it consolidated at the same spot. So here's the idea. On the next visit into this area, what do you want to be looking to do? Nothing other than go long or cover shorts, right? There's a lot of people that say, well, I'm a 5-minute trader. I'm a 15-minute trader. It's not about time frames. It's about levels, right? This exact same level is on a 5-minute chart. That's what, when people hear me speak, it's a newer thing to say, well, would you trade a different time frame? No, it's not about time frame. It's about levels, right? Here is a 5-minute chart of the exact same spot, right? Exact same spot on Friday. This is it on a 5-minute chart. That's your 2540-ish area right there on a 5-minute chart. What does it show you? Massive reversal above that level, buy side. Right, so it's important to look at the levels and understand what's going on there. Another thing I wanted to point out what we're doing on this 4-hour system that we're running. So we got 2 trades on Sunday evening going into Monday, and they were both filled yesterday. So today's what, the 13th? So they were filled on the 12th. One was in dollar yen. Dollar yen actually stopped us out. Dollar yen was a 40 tick loss. Not a big deal. The idea being that your losers are going to be small, your winners are going to be bigger. So this is what dollar yen looked like at a bottom edge. This was the dollar yen trade, right? It was into this edge. You see it broke that around 1 a.m. East Coast time in the U.S. You take your loss and you're done. That's okay. Now let's look at euro, the one that's actually performing, right? So euro, so we bought it yesterday morning, 22.38 I think was the entry. So again, same idea as dollar yen, looking at bottom edge longs, and this is what it's coming off of, this edge. Again, this is a 4-hour chart. So what am I looking at? I'm looking at a positive count. And what this count is, it's just a reversal indicator that's trying to capture a uptrend higher. So it's a timing tool that I'm using, but it's also against a level. And so I played long against 38. I think we saw a low of 35, so 3 ticks off the bottom. Our stops are now sitting at 12, so we now have stops that are in the money that will pay for, at a minimum, they will pay for the loss in dollar yen. But on a good move, what we're targeting, here's the take profit on this trade. It's 24.02. So you can see we bought against bottom edge. Again, timing indicator in our favor. We bought on a pullback to the level, and we're targeting a rotation back to breakdown level. Just textbook stuff. So this trade right now is sitting up, I don't know, 125, 130 ticks. We lost 40 on the loser. You're up 120 on the winner. You do the math, and that's what we're looking to do over time. So just wanted to point that out. It's been a real, crazy couple days. I know a lot of people are obviously seeing volatility that we haven't seen in a while. Keep it at the basics, and like I said, let the levels determine where you're going to act, because the one thing you can determine is when I will act at a level, this is what I'm willing to risk, right? I don't know whether the market's going higher or lower, but I can make my plan and say I'm going to play against this level. And when I play, here's what I'm going to risk. So for February 13th, it's Mark Coe. I hope you guys are having a great week, and cheers. We'll talk to you soon.